there's a common belief out there that says owning a home doesn't make financial sense anymore and that you should rent to save money because there are more costs to owning a home and it's better to have someone else pay those costs. Hey, I'm Dylan Bartram, founder of Smart Home Buyer and your financial prosperity and dream home expert. In today's video, I'm going to show you the numbers and break down why renting is a terrible idea. You can decide for yourself. Look at the numbers and you'll see that it's a terrible idea if you want to build financial wealth. Thinking that renting a home is better to build long-term wealth is one of the worst ways to actually build wealth, and thinking that could force you to spend hundreds of thousands of dollars more in your lifetime and miss out on opportunities to invest that money elsewhere to make much more money. The opportunity cost is going to be way more than the numbers I'm about to show you. It makes sense to think that renting is a good idea because you have very well-known and respectable real estate and financial experts out there saying that buying a home to live in doesn't make sense and you should rent. You got costs associated with it, maintenance and all that. But if this were the actual case though, then anybody who is renting would be building wealth faster than people who own homes. And wouldn't renters have more money saved up than homeowners? Just think about that. What if you're looking at potential home ownership and building financial freedom through a short-term lens rather than a long-term play as it should be? Now, looking at things over just a few years from now isn't taking into account several important details. It's important to make sure that you're buying a home that's priced right, of course, but let's take a look at some of the other key deciding factors using numbers in a scenario favorable to renting to determine what the lifetime cost is. So let's just say you're 30 years old, you're buying a $230,000 house and you're doing a 5% down mortgage. So you're taking on a $218,500 loan. Now you're gonna have PMI, which is also known as mortgage insurance, which at the time of making this video, assuming you got a 740 credit score, is gonna be 0.48% of the loan, which is about $87 a month included in your payment. Now you're gonna pay until you have 20% equity in the home, at which point that falls off. So about an average of 7 years. Now, there are other things to consider as well. And while the interest rate isn't the most important thing to consider, it is still important. So let's just say that the market changes and interest rates rise a good bit over the next foreseeable future to 7%. Right now, they're well under that. Mind you, interest rates right now, they haven't been that high in a very long time. So we'll way overestimate for the sake of demonstration. Now, you're also going to have to factor in property tax, which luckily, if you live in Greenville, South Carolina, like I do, then those are actually usually lower than national average, other parts of the country. So let's say you're having to pay about $1,800 a year in property taxes. Now, that's every year you own your home. Maintenance is also too important to consider. So overestimate and plan on 1% of the home value every year approximately, and that's considering having skilled labor do the work. You don't want to be trying to fix the roof and all that yourself. So let's put all this together and see what it costs by the time you're 80 years old. Now, your down payment is $11,500. Your loan repayment after 30 years at a 7% interest rate, including your PMI, property tax, is going to be $584,667. Property taxes after loan repayment, you're paying back $36,000. That doesn't include any homestead exemption after the age of 65. That's going to save you more money. And then maintenance, $109,250. So the total cost by the age of 80 is $729,918. You're like, wow, Dylan, that's a lot of money for a $230,000 home. But remember, this is the cost of living over your entire lifetime, right? So it's also very conservatively on the high side, very much on the high side. So let's say you find a nice 2 or 3 bedroom apartment or a rental home and your landlord, super cool and doesn't want to, rip you off. He's a nice retired man. He only wants to charge you $1,200 a month, right? So that's $14,400 per year going into someone else's pocket. After After 50 years, that's $720,000. So you're like, well, it's a little bit less than our other demonstration, mind you, with a very high interest rate. Well, renting must be the cheaper, more affordable alternative, you say, right? Wrong, right? This is very wrong. This fails to consider several important things. These are important. Number one, when you rent versus owning, let's say you decide that you don't want to live in your home anymore at age 60 and you decide to sell it. Assuming that your home didn't even appreciate in value even $1, you would still make $230,000 minus your commissions and fees and everything. So your total cost drops from the $729,000 and some change down to $499,918. You sold your house. That's already, cheaper than renting. Number two, inflation. When you buy a home at a fixed rate, your payment doesn't change. It's fixed. And remember, 7% is extremely high. If you have even just decent credit, even below a 740, and you put 5% down, your interest rate's going to be somewhere between 4 and 5% at today's rate. Now, mind you, filming this in June of 2019. So these numbers change drastically. The cost of living and rental rates are going to rise each year at a national average of 1.3%, which means that $720,000 is going to rise to be well over $1 million over your lifetime. Now, what could you do with an extra several $100,000? That's double what it would cost if you bought the home, just renting. And that's at a cheap rental rate, right? So you could continue thinking that renting is more affordable than home ownership, but if you do, you may end up continuing to work your ass off every month just to pay your mortgage and costs to your landlord instead of putting money into your own pocket, instead of growing your own financial freedom, instead of helping out you and your family. Now, if you want to know more, if you're interested in buying a house, you're not really sure, hey, I don't know what to do next, living in South Carolina, click the link in my description to get your free copy of my book, The 33 Things You Wish You Knew Before Buying a Home That Could Save You Thousands. I look forward to seeing you on the next video.